Market's still trading weak, but let's shift focus to one pocket of the market which has really outperformed the market. It's some of the other sector peers in last 1 week, talking about the infrastructure and construction stocks. Look at how they've performed. Punj Lloyd up 13% in last 1 week. IVRCL 65%. Hindustan Construction up 45%. Some of the other ones like Jaiprakash, Nagarjuna, GMR, Gammon India, all of them up in the range of 25 to 30% in last 1 week. What exactly has prompted buying in those stocks? So once again, looking at the second quarter numbers, let's put all of that in perspective with Rupesh Sanke. He joins me from Centrum Broking. Rupesh, thanks for joining us today. What have you made of the outperformance in some of these construction stocks from the last 1 week and fortnightly performance? And also, what did you read of the prospects going forward after looking at the second quarter numbers of most of these companies?
Okay. The recent rally in the last week, my sense is that it is because of cooling off of commodity prices. And the last quarters, the margin compression was there close to 300 basis points because of higher steel prices and other commodities. That is expected to come down significantly going forward. So you will see margin improvement in the coming quarters, and order inflow is likely to remain strong. So these are the factors which are driving the stocks in the recent last 2 weeks.
Rupesh, it's interesting you bring up that point. I'll just take up the order inflow point once again, because a couple of weeks or maybe a month or so back, a lot of analysts were coming out and telling us that there are two things which are working really to the disadvantage of these companies. One is the high interest rate environment, and therefore the constraint coming in on working capital, etc. And the other was outright demand itself. Now, are you saying that despite GDP projections of 6.5% and in some cases even 6%, you're still considering a very, very healthy order intake and order book growth for these companies?
Yeah. In fact, in the different business segment, I can say order inflow will continue to remain strong in the irrigation and water segment, followed by transportation segment. But I see some slightly slowdown in the hydropower and oil and gas sector. That is because of lower oil prices. So clearly, the order inflow will be remain strong for the water irrigation sector, where a company like Nagarjuna IVRCL has a strong presence. While we will see some slowdown in the oil and gas order, where Punj Lloyd has a strong presence. So as far as the liquidity is concerned, yes, liquidity is the fundamental is not the problem for the infrastructure space, but the liquidity. But after recent RBI announcement of 300 basis points CRR cut, 200 basis point repo rate cut and SLR cut, that will drive the liquidity into this sector.
All right, Rupesh, just hang on with us. Confident maintaining margins at 2.80% despite of this cut, and also maintaining that NPAs won't be going up going forward in the light of aggressive lending. Rupesh, coming back to the construction sector, especially this is also quite interest rate sensitive, and the margins are quite low, even single digit in some cases. Do you think that going forward, since the lending environment is coming down from the interest rates, these companies would be on the benefiting front, looking at second quarter numbers where interest costs have gone up?
I think the main improvement will come from the cooling of commodity prices. That improvement will be close to 100 basis points. And the second, as far as the interest rate is concerned, yes, the funding gap is there for the companies, and we'll see concern on the debt financing front also. But if we look at the order book position, which is quite strong. For example, IVRCL has close to 12,000 crore of order book. Nagarjuna Construction has 12,400 crore of order books. So I don't think that interest cost will have that much pressure. But we'll see some pressure, get offset because of cooling of commodity prices. So it's a net, it's a positive for the construction sector as a whole.
Okay, all right, Rupesh, we'll leave it there. Thanks very much for joining us with that take on the rebound that we have seen in some of those momentum construction counters. As are expected later in the day. Well, with that, we're completely out of time on market analytics. We also thank Nirmal at this point in time. And of course, thank you for joining us on the show today. But do stay tuned. Mad About Market comes up next.
Goodbye.